Is Tesla possibly undervalued? Heard a lot of people talking about it. It's actually an AI play that people don't fully realize. Full self-driving FSD, as you mentioned, that's actually AI.
So you actually raise, even though the stock is down and the market's worried about more price cuts. Why?
I think investors aren't seeing forest through the trees.
So right now they're selling more than 1 million units a year in the Model Y, and they're selling, more than 500,000 units a year in the Model 3. Those are extraordinary numbers for any car. There are only 2 cars in the world that sell more than 1 million units. So Tesla's doing fantastically.
Price target is
$150 a share.
As usual, a mixed bag of reactions following Tesla earnings. Investors dumping the stock. Tesla down almost 10% today because sell the news. We hear from a Tesla bull, a Tesla bear, and some very surprising comments in the mainstream finance media. Quick heads up to my Patreon supporters. I've posted my full health protocol, sleep, supplements, diet, exercise, you name it, it's there. Full Excel file, everything, all the supplements I'm taking, my routines for productivity, performance, energy, and overall health and vitality. It's available to all Patreon supporters at all levels. And to my Twitter subscribers, just posted a video today showing how not to invest and why mentally ill people probably shouldn't be investing in Tesla stock.
Tesla, after a strong start to the year, didn't raise its vehicle delivery guidance from 1.8 million. Is that the only thing weighing on the stock?
Look, what we saw last night in results was emblematic of a company that's investing to create long-term durable growth. And they're doing that in multiple ways, right? So first, they cut prices, which you referred to earlier in the year, and that's seeding the market with units. And with those units over time, they hope to basically penetrate FSD software that will create margin upside over time.
This is accurate. Now let's do a little thought experiment. At some point in the future, Tesla's fleet of active vehicles on roads globally will exceed 100 million vehicles. Hypothetically, let's just imagine that at some point in the future, Tesla actually produces 20 million vehicles per year, and they do that for 5 years in a row. There's 100 million vehicles right there. Easier than it seems. At that point in time, with 100 million Tesla vehicles on roads, Tesla has 100 million active users who can potentially buy software from their vehicles, whether it's a subscription to an app through an app store that Tesla takes a cut, whether it's an over-the-air upgrade or update, whether it's a monthly FSD subscription, never mind the potential for some of these 100 million vehicles to participate in a robotaxi fleet, in which case Tesla would take a cut of every one of those fares. The wonderful thing about software is the insanely high profit margins. A bit of code, transmit, bam, done. Each of Tesla's vehicles, active users in their fleet globally over time, can produce recurring, extremely high margin revenue for Tesla. It's in their best interest to get as many vehicles on roads as fast as they possibly can, not only because it's in line with their mission, because the more vehicles on roads, the more money, mostly recurring revenue, Tesla can print in the future. But of course, the very intelligent investors are much more focused on short-term gross automotive margins, because that's what really matters.
They're also spending a lot in OpEx. They're doing that to beef up their AI infrastructure, to enhance that FSD offering, maybe even sell, they alluded to this yesterday on yesterday's call, to sell more FSD software to other OEMs.
So, George, I want to jump in. FSD is full self-driving. I just want to make sure the audience is on the same page with you.
Full self-driving software for its own vehicles and potentially to other OEMs. They're also investing in battery technology with 4680 cells. They're also investing in robotics, right? The Tesla bot could create long-term durable growth, for later on in the decade into the 2030s. So this is a company that, despite an erratic macroeconomic environment, is still putting the pedal to the metal and investing in projects that should create growth for the long term.
Once again, George is spitting nothing but facts. And did you hear him talk about the 2030s? That just happened. Seems like this guy's got a long-term perspective, something that I'm a big fan of.
Absolutely. I think Elon Musk kind of highlighted they want to retool some facilities, some production facilities to get ready for the second half of the year, and that may slow down production. So let's talk about margin. Tesla itself has engaged in a price war that's hit margins. Do you believe this might be the bottom when it comes to its margin story?
Yeah, so that's one of the issues in yesterday's call. The company wouldn't commit. They were very non-committal about seeing a bottoming in margins. We think we're there, so whether it's this quarter or next quarter, they broke this 20% pure gross margin guidance, and right now they're in about the 17% range, and I think that's probably why they don't want to commit to this being a bottom. But if you look forward into Q4, into 2024, we have the Cybertruck ramping, we have additional volumes helping growth, we have 4680 cells ramping, so we think that this particular level probably represents the bottoming process for gross margins.
So, George, I'm going to ask you a complicated question, hoping to get a short answer out of you, though. Is Tesla possibly undervalued? Heard a lot of people talking about it. It's actually an AI play that people don't fully realize. Full self-driving FSD, as you mentioned, that's actually AI.
The fuck? That's CNBS. Have I been transported to a different simulation? That's a great question. I'm just stunned that it's been asked by none other than someone on CNBS. By the way, in terms of Tesla's valuation not being fully appreciated and in fact the company being dramatically undervalued, the long-term perspective, I tend to agree, and that's putting it lightly. Please refer to my fair valuation for Tesla throughout the next decade available on Patreon to understand why. I'm so impressed and kind of disturbed that this question's been asked on CNBS. Times are changing.
Correct. We call Tesla the AI and sustainability behemoth. We have close to $10 in earnings for 2025. And if you look at that relative to other large cap tech stocks, it's relatively undervalued. It's growing faster from a revenue perspective. It's growing faster from an earnings perspective. And all the stuff that we just talked about create visibility to long-term sustainable growth. So yes, relative to those stocks particularly, we think it's undervalued and underappreciated.
Can't argue with that.
All right, George, with that in mind, give us your price target and your rating.
It's 293 price target, buy rated. That's a 12-month price target. But we think that our multiple, which is 30 times 2025 earnings, is relatively conservative, particularly given the fact that this group of large cap tech stocks, what we call the man group, is trading at 26 times. And I mean, you look at the growth for revenues, it's probably 3 times higher. For earnings, it's a little bit higher than that. So we think this is a relatively undervalued stock.
Well, that's disappointing, isn't it? Pretty clear that George has a brain based on his comments, but unfortunately, he's missing the balls. $293 price target after all that bullish commentary. 1 point, Tesla software not fully appreciated, the AI component, autonomy. That's really unfortunate.
Wedbush Securities Analyst reiterating a buy today, raising his price target on Tesla to 350.
Right on cue. Nothing else to add.
So you actually raise, even though the stock is down and the market's worried about more price cuts. Why?
I think investors aren't seeing forest through the trees.
Well, on this, I absolutely agree. If you're a regular viewer, you'll have heard me use that exact same phrase repeatedly in recent weeks and months.
Because ultimately what's happening here, we're seeing a stabilization from a margin perspective, better than expected in terms of auto gross margins. You look at units, right now I think on a trajectory toward 2 million. And then this is the drum roll, the Super Bowl, to now what I believe is monetization of supercharger, battery, and I think last night the biggest thing from the conference call, FSD talking to another OEM.
On this, obviously, I also agree. Far and away the most important news, in fact, the big bombshell on the earnings call, was Elon Musk disclosing up front in his opening remarks that a large OEM has actually approached Tesla and they are in early discussions about potentially licensing FSD. I think it would be fair to say that this is a litmus test. Ask anybody discussing Tesla and you'll gain some insights into how well they understand the company. What was the most important takeaway from the earnings call? If their response is anything other than the commentary around potentially licensing FSD to a large OEM, they are missing the forest for the trees.
Because this, from an AI perspective, is ultimately how I see Tesla getting to $1.5 trillion, $2 trillion market
licensing
cap.
FSD to another OEM. I mean, he said early days. It's never clear. We got no clarity on who it is or how far along or whether it may even come to fruition.
But ultimately, this is, for Musk, I think ultimately this is really the first step of what's going to be a broader strategy because they've built it. I mean, if you look at FSD,
Full self-driving,
and I'll argue, Sarah, that's AI. I mean, we could talk. It's basically AI for automakers. You look at full self-driving. You look what happened with superchargers, and ultimately now batteries. And I think the story's stabilizing from a margin perspective. The poker move massively played off from a unit perspective. And I think that's why this year, I think this is just the start.
The poker move being lowering prices.
Because if you look at the lower prices, sacrificing prices for demand, it paid off, not just in China, in the US. And I think what you're seeing right now with EV play out, you're starting to see this green tidal wave we viewed as the biggest transformation to the auto industry since 1950s. It's Tesla's world, everyone else is paying rent. And I think last night was just another chess move while other automakers sit there playing checkers.
Well, Dan Catchphrase Ives is certainly living up to his name there, but it's hard to argue with any of his points. Tesla is in a totally dominant position, dozens of moves ahead of the so-called competition. They're making a mockery of everyone in the automotive industry, absolutely slaying it. Oh, and that whole unassailable lead with autonomy, once again, I just want to reiterate, people are not getting this. People will regret not getting this. Don't be one of those people.
What about the factory potential delay of shipments? That was something that was flagged on the call.
Yeah, and
is that a big deal?
Yeah, and that's one where, and to your point, a bit of a downtick, production offline from a manufacturing perspective. See, I view that as really what's going to be the start of a refresh for Model 3s. So I think that's a smart move because you're going to have refresh of Model 3s, you got Model Ys, and then ultimately the Cybertruck, we think production starts around Halloween. I think we will start to see Cybertrucks on the road in the month of December.
You do. And do you think people are actually going to buy them?
I think right now, if I look just where price points are and just what demand looks like from pre-orders, this could be something where ultimately it's 200-300K per year as it starts to ramp in terms of Cybertruck. And that's why Austin, if you look at what Tesla's done, Austin, Berlin, of course, China, what we see now more and more, what will be coming out of India and others, they got the scale and scope where no one else has. And I think that's what's starting to play out here. I view Tesla, it's Apple, 2008, 2009 in terms of the story playing out.
He's got a point. Tesla currently building out a fleet, predominantly hardware, although software on top of that, much like Apple, building out their hardware fleet, iPhones, a few Macs as well, but mostly mobile. Next minute, insane profits from software and services.
You know, some of our viewers, you've been right, by the way. I want to make that clear, and that's the most important thing. But people say you're just a permabull. Is there anything that this company could do that would change your opinion?
Yeah, and to that point, like if we start to see like massive demand issues in China, more price cuts where margins get cut and you start to get to 13, 14, 15% margins, then that changes the thesis. But David, to my view here is that we are in the second inning of just a massive transformation in this fourth industrial revolution, not just in terms of electric vehicles, but I believe also when it comes to Tesla, it's the AI story. I think the sum of the parts story, I view this as an AWS moment, similar to what we saw with Amazon, AWS.
You said it.
That's starting to happen now. Supercharger, battery, AI.
And now for some balance, a Tesla bear.
I think you'd have to acknowledge, right, and maybe we've talked about this before, there's massive upward momentum in Tesla shares, regardless of all the fundamentals we're talking about. What do you think would reverse that here?
Good afternoon, Kelly, and thanks for having me on. Look, I think it's very difficult to know, but what investors appear to be reacting to this quarter is that there's continued uncertainty and that it's unclear that margins have bottomed. They declined again sequentially. And I think investors want more clarity. They want more clarity on the Cybertruck, but particularly they want more clarity on when margins may stabilize. And I think it could be tough for the stock for the next several quarters because I do think there's a chance or a likelihood that Tesla will continue to need to lower price to drive the kind of growth that it wants. And along with that price, those price declines, we'll see pressure on margins.
I thought it was interesting that Musk said, when interest rates go up, prices have to come down because it's not apples to apples, but we're obviously not seeing that so much in the housing market. Is this a case of, Tesla's cutting prices because interest rates and macro, or are they cutting prices because EV oversupply and not enough consumer demand?
I think it's more the fact that Tesla has only two products addressing only a small part of the market today. And there's really a limit to how many of those vehicles Tesla can sell. So right now they're selling more than 1 million units a year in the Model Y, and they're selling more than 500,000 units a year in the Model 3. Those are extraordinary numbers for any car. There are only 2 cars in the world that sell more than 1 million units. So Tesla's doing fantastically.
So far, so good from Toni, who last I heard has a $150 price target on Tesla stock because they're just a car company. I got a funny feeling, though, there's a big but coming after these comments. Back to you, Toni.
The issue is they want to keep growing another 25, 30%, but they only have these 2 units and they're likely they appear to be reaching their saturation levels in terms of the number of consumers who want them.
And on today's list of comments that won't age well, apparently Model Y is going to max out at about 1 million units sold per year. That's the limitation. Why? Because no other vehicle sold more than about 1 million units per year. Therefore, it's not possible. Logic totally checks out here, Toni. But on the odd chance that a few years from now, Model Y is selling more than 2 million units per year and perhaps approaching 3 or more, I look forward to revisiting these comments. It is true that currently today, really, Tesla only has 2 high volume vehicles, the 3 and Y. Oh, but hang on. I thought there was oh, that's right, the doorstop that everyone was laughing at called the Cybertruck. Of course, I'm sure Toni would suggest that it's going to be a low volume niche product that real truck buyers would never use because it won't do real truck things because it looks different, therefore it can't. And then, of course, there's the next generation robotaxi platform, multiple variations of dedicated robotaxis, which we know are coming, and the 50% cheaper manufacturing system to make said next generation vehicle. If I didn't know any better, I'd think Toni was under the impression that between now and production of the next-gen Tesla vehicle and the Cybertruck, Model Y sales are suddenly just going to go completely flat because they've maxed out all the possible demand there is. I tend to disagree, because obviously Tony's not an idiot, so he knows that these new products are coming. Tesla's told us about them. Mexico factory happening right now, the Cybertruck in Austin. We know this is happening, so the only way this could possibly make sense is if he thinks Model Y demand is already maxed out. In which case, he should probably get on the phone to Elon and let Elon know, hey bro, why are you ramping up Model Y facilities in Berlin and going to be doing the same in Austin? And why would you do that, bro? There's no demand. You stop making more of them because you won't be able to sell them.
They either need to lower price or come out with new models. And the new models are a little ways off. The Cybertruck is coming out later this year, but it'll be low volume next year. And the next high volume cars are likely only coming out in 2025. So if you're Tesla and you want to continue to grow, and you have this relatively limited product lineup, your lever is price, and that's what they're using.
This is true. I've got to be fair to Toni here. He's right. We know this, though. Shout out to Tesla's secret master plan. I don't think Tony's aware that there are two sides to this equation. Lower prices means more vehicles sold. Hard to argue with that. But on the other side of that, lower costs to produce the vehicles that are being sold for lower prices. Tesla's already driven the cost to produce the Model 3 down by more than 30% since it launched, and they ain't done yet. They continue to eke out new efficiencies, reduce costs, reduce parts, reduce processes. Battery costs themselves, and spoiler alert, if you don't know, the battery is the most expensive item by far in an electric vehicle, also continue to decline. Meaning, I know this is a controversial opinion, but Tesla can actually continue to reduce the cost to produce the vehicles and then pass those cost savings on to consumers without their margins going lower. And in Tony's defense, he is an automotive analyst. He's been covering a mature industry where it's not so easy to drive costs out of the products. Internal combustion engine vehicles are not electric vehicles. One of these is a new technology. Most of the innovation, the cost being driven down, has not yet happened. Most of the economies of scale hasn't yet happened. There's a lot of fat that can be trimmed out of the cost to produce electric vehicles, which cannot be said for internal combustion engine vehicles. I think Toni looks at a Tesla and goes, oh, everything that I know about internal combustion engine vehicles applies to that as well. Therefore, if their prices are coming lower, the only possible way this happens is if Tesla sacrifices margin, because it's not possible for them to reduce their cost to produce their vehicles.
Why do you think they didn't have more to say about Cybertruck in the call last night?
Look, Tesla's planning some kind of formal announcement, likely at the end of September or October. And so they like to sort of do an unveiling and a reveal then. I don't think they wanted to front run. I'm not sure they have a good sense on what availability will be. And also, I think pricing is going to be quite expensive. And so they want to tell the whole story, the capabilities of the vehicle and the initial price all at one time.
Fair enough. Finally, so if I'm looking at the right number, 18.1%, I think was automotive X incentives or whatever it's called. Where do you think that number is going to be 12 months, maybe 24 months from now?
Look, I think it depends on how quickly Tesla wants to grow. So certainly we think there's a chance that those numbers continue to go down. It depends on how quickly they can bring down their own costs, but also how quickly they'll need to lower price to drive volume.
I take it all back. Apparently, we just heard Toni actually is aware that Tesla can reduce their cost to produce vehicles. He's just unsure as to whether or not they can do this as fast as they need to reduce prices to sell through more volume. I knew he was a smart guy.
So we're modeling margins kind of flat to slightly down in the near term. And then it's really up to Tesla next year. They're going to do about 1.8 million units this year. If they want to grow to 2.4, we think they'll have to cut price and margins will go down. If they're content growing and only maybe selling 2 million units next year, then I think the margins can be flat to up.
And either way, your price target is?
$150 a share.
Well, as always, Tesla the company and Tesla stock remains rather polarizing. Toni here with a $150 price target on Tesla stock. Mr. Green tidal wave himself at $350 per share because some of the parts. And of course, the stock market as irrational as always. Tesla stock selling off about 10%. following earnings. Why? Because sell the news. You definitely won't regret that in a few years' time when the robotaxis awaken. I'm just kidding. I mean, who cares about robotaxis? It's much more important to focus on the very short-term gross automotive margins. Athletic Greens AG1 has given me a massive, meaningful boost in energy, allowing me to do a lot more every day, including using my brain more and using my body more. I highly recommend you guys and girls check it out. Athletic Greens AG1 is an excellent way to fill in nutritional gaps. It's got 75 high-quality vitamins, minerals, and whole food source nutrients, plus prebiotics and probiotics and digestive enzymes and adaptogens to help you deal with stress. Plus, if you click the link in the pinned comment or head to drinkag1.com/SMR, you can get yourself a 1-year free supply of vitamin D3 and K2. But don't take my word for it. Here's what some of you guys and girls have to say. AG1 has changed my life. I was, as you described, treating myself like a circus, ate like trash, rarely exercised, used alcohol as a stress crutch, cannabis also. AG1 is what gave me the kick in the ass, got me back to the gym, motivated me to do more for myself, family, my business, etc. Keep doing what you do. Now, I know there's some skeptics, the same kind of people who think Elon Musk is a fraud, reading this going, what do you thought? There's no way that's possible, bro. It must be a placebo effect. Believe it or not, this is a recurring theme. If you give your body everything it needs to feel and perform its best, including having a lot more energy, you'll need ways to use that energy. For me personally, that includes more exercise, moving my body more social activity, and more cognitively demanding tasks, including producing a fuck ton of exclusive content over on Twitter and on Patreon, plus my daily YouTube uploads. The proof's in the pudding. On to another testimonial from a viewer of this channel. SMR, you asked me to provide feedback on AG1. Here it is. It has helped with mental acuity, stamina, and intestinal waste management. Can't read between the lines. Certainly helps with regularity and digestion. That's what the digestive enzymes are for. It has also dramatically reduced my cravings for sugar. You guys need to stop eating sugar. It's fucking poison. I'm 50, 5'9", and overweight, aka a fat motherfucker. I think that's a technical term for overweight, isn't it? Is it fat motherfucker or obese? I can't remember. I average 100 hours a week in the West Texas oil fields as a safety supervisor. Jesus Christ, dude. No wonder you're struggling to keep your weight under control. 100 hours a week. Brutal. It has helped me lose weight. It is not an appetite suppressant. It can help fat people suppress cravings, and motivation to be healthier is critical for changing your diet. Love you, brother. Again, this is a great point and something people really don't seem to grasp. If you have more energy, everything becomes easier. It's like turning on easy mode for life. A few years ago, before I was taking AG1, my health was trash. I was struggling to get through the day, had afternoon fatigue. The last thing I wanted to do was either use my brain or move my body. Didn't have the energy. Now, my biggest struggle every day is figuring out ways to use that energy. I'm exercising way more, doing a lot more with my friends and family, and of course, my work output has increased substantially. And you can fact check me. Check out the average length of my videos I was posting to YouTube 3 years ago. Need I say more? And one final testimonial. Love this one. Okay, here's the deal for me with this AG1 shit. I'm 41 years old and not the type to eat, drink, smoke, or sleep healthy, so I was skeptical. That being said, here's what I experienced. Day 1, meh. Day 2, afternoon fatigue was about 45 minutes late. Day 3, 0 afternoon fatigue. Day 4, 0 afternoon fatigue plus extra energy. Day 5, again, 0 afternoon fatigue plus energy. Wondering, what the fuck, really? See, this is the thing, right? The results for many people are just almost too good to be true. This is the same experience I had. My afternoon fatigue just vanished out of nowhere. I'm like, wait, what the fuck? Why am I not tired in the afternoons anymore? Surely, it's not that AG1, is it? Turns out it was. Day 6 and 7, same thing. Day 8, same thing. Plus, I had the want to get things done around the house that I normally would slack off and not get done. Again, the point, extra energy, you'll need to use it. You'll find ways to use it. Day 9, 10, and 11, and today is day 12. I fucking love it. So however you managed to get me to buy it, I'm so glad you did. Thank you so much, SMR. It really changed me so far. Guys, this shit really works. Just try it. By the way, this is the reason I continue to relentlessly promote AG1. A lot of people get real fucking mad in the comments. Oh my God, snake oil salmon sold out. Oh my God, he's a scammer. This is fraud. But constantly, I'm pretty sure everyone making these comments is also currently short Tesla stock. I'm not particularly concerned about people having a negative perception, those folks suffering from small brain syndrome, still living in my bum's basement syndrome, etc., writing mean comments, claiming AG1's a scam or it doesn't work. I mean, bro, when I get feedback like this is what keeps me going. And remember, there is a 90-day money-back guarantee. There's nothing to lose here. Just try this stuff for a month, and if you don't get these results, get your money back. See, it's a literal no-brainer. It's an IQ test at this point in time. Testimonial after testimonial after testimonial like this. Get your money back if it doesn't work. Just try it for a month, and if it doesn't work, get your money back. Today's the day. It's finally time. Be like this guy who was a massive skeptic, but finally, after 1,000 promotions in a row, caved in, tried AG1, and has results like this. Head to drinkag1.com/SMR or click the link at the pinned comment, and please, let me know how you're feeling in a few weeks' time. Now, if you'll excuse me, Time to put my extra energy to good use. I'll be recording some more exclusive content for Patreon and my Twitter subscribers. So click the links to the pinned comment. See you over on Twitter and or Patreon. And don't forget to grab your AG1. Love ya.